Hello, everybody. My name is Frank Segall, and I am the co-chairman of the Cannabis Business Advisory law group at Burns & Levinson, and the chairman of our business law group with my partner, Scott Moskol, and my partner, Katrina Skinner, who's on it today. We're pleased to present to you, I call it this microburst webinar, where we're going to talk a little bit about cannabis banking. We're going to try to get a lot accomplished in a short period of time. Presentation will only be about 20 minutes. We want to just give you guys an overview of some issues that we are constantly confronting in the cannabis industry with respect to banking. For those of you who aren't familiar with Burns & Levinson, we are a premier corporate middle market law firm based in Boston. We were one of the first firms to get into the cannabis space about almost 10 years ago. And we have a national practice handling clients from Boston to California and internationally as well. We're truly focused on all aspects that affect our clients in the industry, but with a particular focus on corporate M&A, capital structure, and banking, lending and regulatory as well. We've continued to grow our practice nationally and our group, which is over 15 attorneys today. And we were thrilled, particularly in the banking area, to have Katrina Skinner join us several months ago. Katrina was the president and general counsel of Safe Harbor. She talked a little bit about that, but truly is one of the leading regulatory banking experts, attorneys in the country, and has significant experience in guiding credit unions, banks, and other groups that we'll talk about today throughout the regulatory process and maze that you have to go through for compliance. As questions come up, please feel free to hit the Q&A box. As I said, we'll talk for about 20 minutes, and then we will try to address some of your questions. Again, giving an overview on some of the major issues that are out there. So what I'd like to just briefly do is, Scott, maybe just give a brief introduction on yourself and Katrina, and then we'll dive right in.
Sure. So thanks, Frank. I think maybe what I can do first is kind of give an introduction of what we're trying to accomplish. So over the next 3+ months, we will be having a series of micro webinars, micro bursts, as Frank called it, just like this, in which we will discuss various concrete, small aspects of the whole cannabis banking financial world that we're in, as well as either 2 or 3 sort of major 1-hour webinars, which will go more in depth into terms of certain issues that are affecting the industry. As Frank mentioned, we are here, we are welcoming Katrina Skinner to our partnership. Katrina has a national reputation with respect to banking and cannabis, and as well as has been involved a lot with hemp CBD issues as well. My name's Scott, as people know. I've been with Frank as a partner in this endeavor since I think we started in 2013. So we're definitely one of the oldest, certainly on the East Coast, law firms that have really made a dedicated push into cannabis. And what we're here to start with is about banking and cannabis. And maybe about 6 or 7 years ago, it was very, very difficult, if not almost impossible, for cannabis companies or MRBs to actually obtain a true deposit account. Safe Harbor and Partners Colorado Credit Union is one of the first, certainly in the industry, to accept deposits, but that has slowly expanded. And while banking still remains a difficulty for MRBs, depending on what part of the country, there are more and more banks and credit unions that are looking to get into the space or are already into the space. And we are hopeful that this series of webinars will provide some information, and not only just for banks and credit unions, but certainly for operators themselves, so they can understand the process, as well as other institutions that deal with financial issues, including MSBs or money service businesses, payment processors, broker dealers, investment bankers, etc. All of which have, there are some regulatory restrictions imposed upon them to be part of or take part of the cannabis world. So let me, before I go on and on, let me turn it over to Katrina, and maybe she can just kind of give a little introduction of herself, and then we can kind of delve right in.
Thanks, Scott and Frank. Like Scott and Frank said, my name is Katrina Skinner. I have actually been in the cannabis law space since the end of 2012. I entered this space, some colleagues of mine brought me in on a case to do some civil aspects that took a couple years. And as a result of that case, after it was resolved, another one of the attorneys that I was working with introduced me to Cindy Seafried and Partner Colorado Credit Union. They were just starting, she was starting the Safe Harbor banking program, which Frank and Scott referred to. And she asked me if I would do a legal review of the program. So I did the first legal review of her pilot program in 2015. And that's kind of what got me started into this space. And I was fortunate, I stayed working with Safe Harbor as outside counsel for certain matters. And then when they decided to expand the program nationally, they brought me in-house. And I was in-house counsel and eventually became the president, got to work with a lot of great financial institutions throughout the country. And that's where I met Frank and Scott, because they served as outside counsel for Safe Harbor Services. And when I decided I wanted to go back to practicing law, they presented me with this opportunity to join the team. So it was a great fit, and I'm super excited to be part of the team and work with this caliber of attorneys and to continue the mission of normalizing banking for cannabis-related businesses.
Great. And as I said, we have a national footprint, and banking is at the forefront of it, and we are rolling out a national program for our clients for compliance that we're going to dive into right now. So I'm going to be the moderator, so to speak, and we're going to cover a couple key topics. But as anyone on this who's attending this is probably asking themselves, and we get asked this question all the time, what are the threshold and primary concerns about entering into this space? Particularly, the question comes up, what's the Bank Secrecy Act all about? Am I, committing money laundering? Am I aiding and abetting? And these are usually the first questions we're asked by clients who are interested in getting into the space. So I'm going to throw that out to you guys to address the bank. Let's start with the Bank Secrecy Act and then talk a little bit about the anti-money laundering.
So, Scott, I'll go ahead and take this part of it, and you can jump in wherever you want to help. So one of the primary concerns for financial institutions or other businesses actually who are involved in the financial aspects with cannabis-related businesses is what are the risks? And this is a big concern of regulatory agencies as well. So it all starts from the fact that under federal law, cannabis remains illegal under the Controlled Substance Act. And as a result of that, any proceeds that are gained through the cultivation or sale of cannabis are illicit or illegal funds. So by providing banking services or financial services, it's technically money laundering under the federal law, and that causes a lot of pause and concern for directors and officers of financial institutions who want to get into this space. In addition to not only money laundering, but it also implicates aiding and abetting and some other federal laws or criminal statutes that potentially could subject people to prosecution. However, we don't know of any financial institution who has been prosecuted for providing cannabis services, providing that they're doing it in a compliant way. But it all starts with doing it in compliance with your BSA obligations that financial institutions have, and in compliance with the 2014 FinCEN guidelines. And so,
and I think I would just add that while the Bank Secrecy Act and warding off any potential money laundering schemes or financial terrorist acts, which is also part of the Bank Secrecy Act. I just want to state that the BSA, while does have special prominence in the whole world of cannabis, BSA has nothing to do, was passed in, I think, 1970. So way before way before California being the first state to legalize medical marijuana. And so I think what's important for folks to understand is that most, if not all, banks and credit unions will have their own BSA officer as part of their internal compliance team. And so what we will find out in the next, this webinar, further webinars, is that within the framework of the BSA, it does provide us with some guidance as well as some restrictions as to how these types of deposits can be, or cash can be banked.
Yeah, essentially the BSA is a set of rules that requires financial institutions to help detect and prevent money laundering. So cannabis banking is, to me, just an additional layer of compliance on top of the current BSA obligations that financial institutions have.
I like to say you take your BSA policy and sprinkle some cannabis dust over it or anything else cannabis related.
But Katrina, maybe you can talk about that extra layer of protection that is required and the kind of things that we tell our clients as part of a regulatory package and checklist we put together for them. Things like know your customer and how that kind of scrutiny is much higher, because we get into issues about, are these funds US based? Are they foreign funds? Things of that nature, which gets brought up in capital raises and lending transactions, compliance issues with various cannabis commissions and states. Maybe you can shed a little light on that.
Sure. So again, some of those regulations you were talking about, like know your customer, those are just part of all anti-money laundering programs that financial institutions have to have. But if you layer on top the cannabis, because of its illegality at the federal level, FinCEN, through the 2014 guidance it issued, outlined enhanced due diligence. So in order to know your customer, FinCEN has outlined additional items that you need to ask for. So if you're getting, a cannabis company is getting a bank account, they're going to be expected to provide additional information about the company, such as their license, a copy of their license to make sure they're actually licensed, as well as the application for the license. So I like to say it's more akin to loan underwriting if you're going to get a loan, rather than it is to just opening up a typical bank account. But financial institutions need to know the source of funds to make sure they're not being derived from truly illicit cannabis monies. And especially with international, it implicates a lot of international treaties and that sort of thing. So banks that are willing to accept cannabis related funds are going to typically scrutinize those funds and the source of those funds far more than they would normal business transactions.
I think also part of that too is, as we know, most, if not all, MRBs are companies, where they're LLCs, C Corps, they're some form of entity. And so as such, any bank or credit union that's going to bank an MRB, they need to know who the owners are, the beneficial owners. And even outside of cannabis, right, FinCEN requires that any entity that is going to bank with a bank, non-cannabis, anyone who owns more than 25% of the stock or the voting power, they need to be disclosed. And oftentimes with these cannabis BSA policies, that percentage is lowered. So it's not uncommon as a threshold that any person who owns more than 10%, sometimes as low as 5%, will have to be disclosed. And this come up, and when we represent operators as well, and sometimes there are folks who may own more than 10% who don't want to be disclosed, but unfortunately that's part of the process in order for that company to be able to obtain that depository services. So I think it's important, because many times people believe, oh, I can buy into an LLC or a C Corp and remain anonymous. That isn't necessarily true in the cannabis world, A. And certainly B, even in non-cannabis, if you owned over 25% of the rules that FinCEN, beneficial ownership rules that FinCEN promulgated, I guess it was 2018, 25% threshold, over a 25% threshold you have to disclose.
So that's a good segue into the discussion about who's really covered by the BSA regulations, because a financial institution is a much broader definition. And we have on the call today attendees who are broker dealers, investment bankers. Maybe you can talk a little bit about how that plays into this, because people are raising money, the money's going into the bank accounts, and there's compliance issues that those groups need to be concerned about as well.
Scott, do you want to take this one?
So, yes, sure, why not? So under the BSA, there are certain obligations that all covered financial institutions have to comply with. One is, for instance, filing suspicious activity reports, or SARS. And under the law, most people think, okay, this only applies to banks, credit unions, but that's only a subset of the parties that are covered by BSA and have certain compliance obligations and reporting obligations imposed upon them. So it's not just the credit unions or the banks, it's also broker dealers or sellers of commodities and securities, investment bankers, money service businesses or MSBs, and that could be money transmitters, payment processors, some non-regulated lending entities, trust companies, and casinos, which kind of makes sense that they're predominantly all cash business as well. And as such, technically those types of entities that already will have a BSA policy in place, or should as part of their compliance, but they will need to ensure that their BSA policy is kind of sprinkled with the cannabis dust that we were talking about earlier, and make sure it's not only compliant with BSA, but certainly with the 2014 FinCEN guidelines that we've received in terms of banking or dealing with cannabis businesses.
Yeah, and I'd just like to add that if these other types of entities or businesses that aren't traditionally considered financial institutions, meaning anything but banks and credit unions, if those operators or those businesses have their own BSA AML programs, especially the cannabis components, and they're dealing with cannabis, that really gives a level of comfort for the financial institutions that they in turn want to bank with. Because if those financial institutions are willing to take cannabis funds, then they will look to their own customers to make sure that they know their customer's customer, especially when the money's moving back and forth. So that oftentimes makes a difference in getting a bank account for some funds, or merchant processors or even payroll companies have the same situation. If they can prove that they are also meeting their BSA obligations, that certainly is helpful for their financial institutions that they're looking to bank with as well.
Quite often people come to us, and whether it's a bank or investment banking group, broker dealers, and they say, well, I want to get into this, and you're telling me no bank's ever been prosecuted. We're not aware of investment bankers or broker dealers in the cannabis space for getting prosecuted for doing a raise. People want to know what kind of guidance is out there. And obviously that takes us to the Cole memo and to FinCEN guidelines. Can you, Katrina, why don't you talk about the Cole memo, and then Scott, why don't you address the FinCEN guidelines as to how we try to give clients some more comfort with respect to the regulatory environment that's out there.
Well, the Cole memo was a memo written by the Department of Justice to outline to its prosecutors nationwide what the enforcement priorities were. It was early on when states started to legalize marijuana, and it was still at the newer stages of the conflict between federal and state laws. So what they did was they issued this memo saying to the prosecutors, here's where we need to use our resources. And there were 8 priorities listed. And if those priorities were implicated, then that gave the prosecutors more discretion to go ahead and enforce those or pursue those cases. It was rescinded by Attorney General Sessions when he came into office, but it is still a best practice, and it's still something that most financial institutions or even other entities that are working with cannabis financial transactions follow. So it still goes along with the enforcement priorities of the Department of Justice. It contains things like if the funds are being used to purchase firearms, or money, or it's being diverted to minors, that sort of thing, or on federal lands, cannabis, and all of those. So if those are implicated, then it's more likely that prosecutors are actually going to take action against those type of violations versus those operators in states that are operating compliantly with state law.
Scott?
And when FinCEN issued its in, I think, February 2014.
Oh. Well, until, here he comes.
Sorry about that. I guess I got bumped off. So apologies. So anyways, these were guidelines, and especially since cannabis has been traditionally an all-cash business due to the lack of credit cards. I know there are some debit card programs, but for the most part, it's an all-cash business to this day. And so FinCEN issued certain, I guess, protocols. I don't even want to say rules, because not really rules, but just basically saying, hey, if you kind of follow along, fulfill your BSA obligations, make sure, and of course, these are broad strokes here. Make sure that the core MRO priorities aren't being violated by the MRB as a deposit. Know your customer. Make sure that you have certain protections against or looking to protect against money laundering down the line. Those are the types of information or guidelines we've gotten from FinCEN. Also, I think what's important is that FinCEN recently has been, since industrial has been rendered or descheduled from 2018 Farm Bill, we have seen FinCEN has issued certain statements with respect to banks and credit unions looking to bank those. And essentially, while you don't need to file an initial marijuana SAR or suspicious activity report as you do every time you open up a bank account for a cannabis company, the banks and credit unions are still required to ensure compliance with BSA. And so for example, if a hemp company that's growing, cultivating, handling hemp, the bank, we know that the bank needs to make sure they are licensed, right? And the bank needs to ensure thereafter that they continue to be licensed, they're in compliance, they're not getting any issues with the Department of Agriculture, they're not over their percentage over and over again in terms of testing. If any of that does occur, then yes, SARs have to be filed. But essentially, this has given banks and credit unions major comfort in terms of providing those types of services to hemp companies.
Yeah, no, that's a good point, because what we are seeing is more banks being receptive to not only taking deposits from hemp companies, but actually making loans and credit facilities. And we'll touch on that briefly at the end as to what's going on in the marketplace. Why don't we talk about, and this applies to operators who are on attending the webinar today as much as the banks and credit unions who are interested in this space. Let's talk about the complexities in opening up the accounts and getting qualified, and what should an operator, and it applies equally to a lender, what should they be looking to do and be prepared to do, Katrina, because the scrutiny is much more, it's much harder than just going down to an institution and opening up a checking account.
Sure. Just in the interest of time, I'll just go very high level, but the due diligence.
We're gonna run over a few minutes, so don't worry about it.
The due diligence is much more stringent, and it requires transparency. So it really, to me, and in my experience in the financial institutions that I've worked with, it depends on the ability and willingness of the operators to provide the information that's been being requested. And each financial institution is going to have their own due diligence requirements, but there's some standard ones because they're required under the FinCEN guidance. That includes, again, licenses, information on your licenses, a copy of your application for the license. That one hangs people up a lot. Operating docs. So if you have an operating agreement, your bylaws, you should expect that. Copies of certificates of good standing for your from your entities, whichever jurisdiction they operate in. Delaware is always a sticky one that really slows things down because they don't make it readily available. Tax returns, financials, a list of vendors, a list of who you anticipate paying, list of locations. And typically there will be risk ratings done by each financial institution. So there's going to be an interview, and it's somewhat of a time-consuming process, but the quicker operators gather all the information, the quicker the application process goes. And that's usually what delays it, is if the information dribbles in, it's going to take longer than if you've got a nice, concise application packet. And again, whatever financial institution that the operator is working with is going to have that ready. It may be done on paper. It may be done on automated platforms. Some financial institutions are using automated platforms now. That's making things easier, but it's not just come down with your driver's license and sign the signature card. That's not going to happen.
I mean, in many ways, so I've done lending, as has Frank, for sadly decades now. I mean, we're doing this, we've had this that long, but to a certain extent, what the information that's being requested probably isn't that dissimilar from information that would be requested in terms of underwriting or doing due diligence for a true commercial loan. Right. So they will ask for everything. To the extent you've done previous capital raises, they'll want to see those types of documents and be able to verify where the source of money has come from that you're depositing into that particular bank. And any type of information, banks and credit unions probably will go overboard, ask more, and require any sort of documentation that you may have as part of your corporate existence and corporate being.
Yeah, there's an expectation. I just wanted to say.
Go ahead.
There's an expectation of transparency.
Yes.
So the more transparent the legal entity customer is going to be, the quicker and easier the process is. And it's not because they're trying to invade privacy, but rather it's trying to, again, verify that the entity is legitimate, as are its owners and that type of thing. So being willing to share the information is going to make the process much easier.
And I was just going to add that for those on the phone who deal with capital raises as part of this process, obviously the funds have to be deposited. So the bank or credit union is going to be looking at the KYC on where those funds are coming from. And you will have a much higher level of scrutiny when you're taking in investors, particularly if you're looking at overseas investors. Not just KYC, but background checks. The scrutiny is much more intense. And if you're an investment banker on the phone, you're going to want to make sure that as part of the process, you're making sure that KYC is being done because you're bringing in those proceeds. So sometimes you might get additional certifications directly to you from the investors. So it is much more rigorous process. It's not prohibitive, but it's to protect the operators as much as it is to protect the institutions as well. So in the interest of time, I did want us to hit on what we're seeing in the marketplace as ancillary companies that are coming into this space as well, and just in general what you're seeing with respect to more lenders coming into the space, and how that could create changes in this ecosystem that is being developed or create opportunities for this ecosystem. So Katrina, what are you dealing with pretty much daily on that front?
I'm seeing a lot of new companies, and I think we're going to have some webinars, and that's part of this series that we're going to do, where we will feature some of the industry partners and strategic partners that you're going to need if you're in this space, such as cash transport, merchant processing, lending solutions, and even for compliance for financial institutions that are interested in this space, some of the new automated platforms that are coming out to make their jobs easier. So that's kind of what I'm seeing a lot of right now.
I think one thing that I've been working with, and we will definitely showcase in the next few weeks, as everyone knows, D&O or Director and Officer Liability Insurance is very, very difficult to obtain, or very, very expensive to for a actual plant-touching cannabis operator. There are now certain programs that certain insurers are coming out with, which will provide specific D&O insurance for the directors and officers of a financial institution that's entering into the space. So not just the banks and credit unions, although of course they all want D&O insurance for the directors and officers, but certainly for broker dealers, investment bankers, MSBs, merchant processors. Oftentimes their D&O insurance has a hole in it because it'll have an exclusion for any intentional wrongdoings. And since cannabis is federally illegal, certainly most companies would say, okay, well, you're working in the space, so there's no coverage. This has perplexed the industry, I think, for many a year. And I think, well, I know for a fact, 'cause I've spoken with a few groups over the last 2 weeks, there are products coming to market. We want to do a little bit more investigation, and within the next 30 days, we'll have another one of these features discussing what those products are, pricing, how they work, how they deal with risk. And I think, Katrina, as you and I have often spoken about, one of the main concerns that new entrants to the market, new covered financial institutions, whether broker dealer, bank, whatnot, have is how do we make sure our directors and officers feel, I don't want to say safe, but still feel that their risk has been mitigated by kind of pursuing this new line of business in the cannabis industry.
Oh, definitely. So the development of new products, the insurance products for D&O in the D&O space are going to be huge and should be another element of this entire program that gives a level of comfort, in addition to the ongoing endorsement of the FinCEN guidelines, legislative changes. This is just one more area that it's going to help and make it easier for those financial institutions looking to get into the space.
Yeah, it's an entirely evolving industry. What we're excited about at B&L for the audience is that we have clients like yourselves out there that are at the cutting edge in the forefront. Gardner Federal Credit Union was one of those credit unions that was the first to take deposits in the adult market, and we either counsel and we advise them through that process. But now we have merchant processors, we have clients who are developing credit cards and new lending programs. So we see this evolving every day, and it's exciting for us to be able to work with those kinds of clients. And if any of you are on the call, obviously consider giving us reaching out to us so we can assist you as well. I want to end this though, because everyone always asks about the Safe Banking Act. Katrina and Scott have been following it closely, and nobody has a crystal ball. We're in a whole new world with a pandemic, which is horrible in and of itself, creating enough political issues over whether you wear a mask or not. Can you get a Safe Banking Act passed in this environment? It's a whole nother issue. But maybe you guys can give your insight as we wrap this up into where you see the Safe Banking Act, and to the extent you do have a crystal ball, where you think that might come out soon or in the near future. Katrina?
And I hope we had one question that this kind of touches on about what lawmakers are doing, and is it going to help the entire space if we get some of that guidance? So I hope if this question is, if we don't answer it directly, just please reach out afterwards, and I'll be happy to opine on my opinion of the whole thing. But I think if the legislation passes, it's going to be a big help, because it gives additional guidance for financial institutions, and it removes the personal liability for the directors and officers who are operating these programs. And removes the liability for insurance companies as well who are providing financial services. And those are two really big hangups. The other big part of it is it requires federal examiners to establish exam criteria. So that should simplify and set expectations for financial institutions who want to get into this space. And so I think that if they pass it, it's going to help the entire space, and it will open it up for additional services for ancillary companies and whatnot, electronic payments and that type of thing, because there will be better guidance and there will be normalized banking, or at least somewhat normal banking, in the sense that it's still going to always be highly regulated, but you should have more players in the space, which should facilitate payment processing, e-commerce solutions, that type of thing. So,
but that won't necessarily do when, and I'm not saying if, I'm saying when the Safe Banking Act passes, that won't necessarily do away with the level of compliance and or KYC/due diligence that these banks have to proceed with. Certainly not until cannabis is totally descheduled, and maybe even not then. But in terms of a crystal ball, we know that the House passed a version of the SAFE Act. It's stalled in the Senate this year. Now there's talks, well, not even talks. So for the next coronavirus relief package from the government, in the version that the House has passed, it does contain similar protections that would be offered in the SAFE Act for financial institutions, so both to take cannabis deposits, to lend, provide other financial services. As followed the news, many of the Republican senators have expressed sadly, over the fact that in terms of trying to create new jobs or provide economic relief to those affected by the pandemic, the House was trying, or the Democrats were trying to attach a cannabis banking bill. I personally don't see a version of, the CARES Act with Safe Banking Act passing this year, solely because it's such a highly contested election, and everything that is passed has so major church with respect to the presidential election, with respect to the control of the Senate. I do believe, regardless of the wind, that in 2021 or 2022 at the latest, some version will pass. Just because there is enough bipartisan support. It's just that there are certain holdouts, especially in the 2020 election cycle.
All right, well, we've gone a little over, but as we said, these are like microburst, flash floods of information we're trying to share with you. We have a series of these webinars coming up. We're going to continue to come before you with relevant information, hopefully cutting edge developments in the industry. As I said, we've got some clients that are doing very exciting things that we will be sharing with you in the future. And we'll continue to host these events. And if anyone has any follow-up questions, you have our contact information. Feel free to reach out to us. And if we're not working with you, we hope we have the opportunity in the near future. And we'll be back in touch with you soon. So thank you, and everyone stay safe. Bye.
Thank you.